there is major movement on the stock market. And yes, I'm going to get into what they're not telling you as well. But stock markets crashed worldwide over fears of U.S. recession. Fears of an impending U.S. recession sent stocks across Europe and Asia tumbling on Monday. The FTSE 100 index in London fell by 2% and was followed by the Nikkei 225 in Japan, plunging 12.4%, the biggest one-day points drop in history. In Paris, the CAC 40 fell by 2.2%. The stock market crisis was fueled by the predictions of a U.S. slowdown caused by weaker than expected news across the domestic economy. I don't know why our jobs numbers are poor or things are not going well for workers in America, considering we're in a dying empire in which the ruling oligarchy doesn't give a flying shit about anybody, and all the corporations that technically rule our government are just sending all the jobs overseas, or if not that, then finding ways to exploit the workers to such a degree that workers around America are struggling. And, now you're at a point where the middle class has been completely decimated or hollowed out, if it still exists at all. And even people below, the below the middle class are suffering even more. You have 61%, I believe, of America can't afford a household. You have 60-something% are living paycheck to paycheck. And for some reason, the economics are not going goodsies. I don't understand. What happened? Why not good? Anyway, jobs data, it was lower than expected. It was released on Friday, and it was poor, and the U.S. Federal Reserve decided against cutting interest rates, unlike the Bank of England and other central banks. There were also reports of concern that tech stock in the U.S. was overvalued and may be heading for a correction. I love all these euphemisms. A correction. Oh, you mean a crash? It's a correction. I see. It's a correction, as if there's some sort of noble, accurate answer to what stock should be, considering it's all a Ponzi scheme. It's, let me just correct that number. Oh, you mean make the Ponzi scheme a little 3 percentage points less exploitative, or what kind of correction are we talking here? And of course, I mentioned this often. It's something that cannot be said in your mainstream media, cannot be said in any of these articles, cannot be said in the hallowed halls of our universities. But the Wall Street, the stock market, is by dictionary definition a Ponzi scheme. It is based on people investing, betting, gambling on these stocks. Most of the money that people make on the stock market, especially now where people can buy and sell minute to minute, most of it is made not by actually creating any kind of worth, not by actually building something that people want or people use, but instead by buying it at a certain price and then finding another Nimrod who will buy it who is slightly more expensive, and then you make money. Yay! But that's not actually doing anything for the world. There's no actual benefit to humanity. All you've done is found a way to sell your little Ponzi ticket for a little bit more. Now, again, I try and remind people that doesn't mean you can't make money. People think Ponzi scheme, they think lose money. No, a lot of people make a lot of money from a Ponzi scheme until it crashes, and many of them have already gotten out of it. So you could make tons of money from a Ponzi scheme as long as you get out at the right time. None of that can be said on CNBC. The cautious signs coming from the world's biggest economy sent investors fleeing from risk. Circuit breakers designed to stop panic trading were triggered a number of times in Japan and South Korea and froze the market for short periods. You know what says that this is that the free market's always right and it's always legitimate and it has this kind of intelligence that we can't even understand, and it just is always doing the right. Nothing says that like having panic trading cutoffs, like red alarms that go off that maybe the market should not be listened to, and maybe we need to stop these people from doing what they want to do, which is sell all of their stock. And so they just shut down the markets for a period of time. Reuters reported that JP Morgan analysts were bearish, saying there was a 50% probability of recession. Signs of emerging weakness in the U.S. economy are evident, with negative indicators from hiring, retail sales, and PMI reports. And here's something else that cannot be mentioned on any of your economics shows, cannot be mentioned on any of your news shows, cannot be mentioned by any of your ruling elite, cannot be mentioned by any of your ruling oligarchy, which is we have an economic system that is actually technically the opposite of economics, the way the term was originally devised. The term economics originally, when it first started being used, meant the efficiency of a society, managing a society efficiently. The first time that GDP, gross domestic product, how much a country makes and produces was used widely, really started around World War II. So this is not very old, but it has become everything now, right? Everything's measured on GDP and everything's economics. And so it's quickly taken over the minds of a lot of society. But the original use of the term economics was about how efficiently a society works. Now the term economics is basically how much can you exploit a society? How much can you, to give one example, how many trees can you cut down and sell them in a given time? And if you can chop down a bunch of trees and make a bunch of money from them, then guess what? Your stock on the stock exchange is doing well. Wow, that tree cutting business is doing awesome. They've cut down a lot of trees, made a lot of money. Boom, the stock goes up. Everyone's celebrating. Yay, our little Ponzi ticket is doing well. What is not calculated at all is what that does to humanity, what that does to the land, what it does to the air, what it does to the animals, whether there are enough trees to maintain us in our society. None of that is calculated. So it's the opposite of economics in that way. It is instead a measurement of how much you can destroy, how much you can eat and shit out is it's basically what it is. And it really is the reverse of the original term for economics. But none of that also can be said on your mainstream media. None of it can be mentioned. It is a giant secret. And let's see, here is New York Times saying some of the same stuff, but being slightly calmer about it. Fears of slowing U.S. growth jolt markets around the world. Trigger a sell-off market in a global rout. Well, I guess global rout sounds equally panicky. The declines followed a U.S. jobs report on Friday that showed significantly slower hiring, with unemployment rising to its highest level in nearly 3 years. I imagine that at least a percentage of this has to do with AI. I know people like to say AI is not taking jobs, and yet every time I mention it taking jobs, someone in the comment thread goes, yeah, it took my job already. My job was to read reports and summarize them. My job's gone that I had for 15, 20 years. So every time people make fun of me for saying AI is taking jobs, there's people in the comment thread going, oh, no, my job's gone. Or people saying, yeah, my job's headed that way. They've already, such and such business has already cut this many workers, and it could be me next, etc. I don't know that this jobs report, how much of it has to do with AI, but I imagine some of it. People just like to point to the fact that, if you ask AI to write a comedy routine, it doesn't do very well, which thank God for my job. People like to point to that, or they point to like, oh, a lawyer asked AI to write his law briefs, and it turned out he made up half the shit and it was wrong. Well, yeah, it depends on what you're using it for as to how good it is. But if it's to summarize a report, it's almost always basically getting that right to some degree. This whole idea that it can't take jobs or isn't taking jobs is, again, piles of bullshit. Here's another thing that's a little bit scary. So you remember the Big Short, the movie made by my buddy Adam McKay. By my buddy, I mean I interviewed him once on Redacted Tonight, and he said he loved the show. So BFFs, I'd say. BFFs. I send him a Christmas card every Thanksgiving, just because I can't. The dates are very confusing to me. So Big Short, made by Adam McKay, but it was about the 2008 collapse, right? And largely about one or two traders that knew it was coming, knew the collapse was coming, knew the housing collapse was going to happen, while everyone else said it was fine. And one of those guys, the guy who's basically called a genius in The Big Short, is Michael Burry, the Big Short investor, famous of making big bucks by predicting the collapse of the housing market. He just made another huge and risky bet. According to the SEC filings released Monday, Burry placed bearish bets against the S&P 500 and NASDAQ 100, totaling $1.6 billion, more than 90% of his portfolio. His fund, Scion Asset Management, purchased $166 million and then $739 million in put options, which is, it's all gambling. I mean, it's a different version of gambling, but we pretend gambling's naughty and this isn't for some reason. But anyway, gambling that the stocks are all going to go down significantly. It signals that he anticipates a significant crash. The nearly $2 billion wager comes at a time in which both the S&P 500 and NASDAQ 100 have gone up significantly this year, with respective increases of 16% and 38%. But of course, it's impossible to keep that going. It's cancer. I mean, if you have cancer running rampant, eventually it kills the host. And you can't have corporations just growing forever with no consideration for the natural world. It just kills the host. But anyway, Mr. Burry is now making a massive bet that the stock market will essentially collapse or crash heavily.